going on, everybody? It's Kevin here from Stock Arrows. Today I'm going to be bringing you guys a video on trading consistency. This is going to help a lot of you traders out there find a way to become profitable within the markets and stay consistent along that path. Without further ado, let's get right into it. Alright, so what does it take to be consistent within the markets? In order to be consistent, one must have a solid trading plan, a journal, risk management, and being able to stay disciplined through the tough times. Use your tools to your advantage, focusing on the process, and having a day trading network. In order to create a solid trading plan, you must have these four things. You need an entry plan to know where you're getting in. You need a stop loss to prevent things from going wrong, and that you have a calculated risk. 3, you need to have profit targets, so when your trade is winning, you can choose either to sell everything at that target or to scale out at those targets, whichever one you want to do. Number 4, how much are you going to risk? You guys need to accept how much you're going to risk. This way, you can think about if the trade is even worth it to take or not. Next on the list, we need to use our journal to learn and adapt, right? These things are super important because they're going to help you identify what it is that you need to keep doing that you're doing correctly in order to stay profitable, right? These are things that you need to account for. What's your average win rate like? What's your average win and loss? How many trades are you allowed to take? How did you feel during those trades? What setup did you take? The sizing, the trade rating, the entry and exit from the trading plan? What was the market sentiment? And what are some pros and cons that you did, right? So for the average win rate, this is going to be important because this is going to help you align with your risk to reward, right? If you have a 50% win rate, that means you'll just be break even if you have a one-to-one trading strategy, right? If you can get a 60% win rate and a 40% losing rate and you still have that one-to-one risk to reward, you can still be profitable. But it would be even better if that 60% win rate would be a 2-to-1 risk to reward, right? These are things that just come over time throughout your journal and that you let the strategy define it for you. How many trades are you allowed to take? This is important. A lot of people need this because it's going to prevent them from over trading. Emotions, this is going to help you a lot because it's going to help you identify how you're feeling during the trade, and it's going to help you afterwards in the next trades that you take. What setup did I take? This question is important because it's going to allow you to identify which setups you perform the best on. Sizing, you just need to keep track of this, make sure it's consistent. Trade rating is also important because if you're noticing yourself taking trades that are not A plus and they're like B, C, or D grade, why are you taking those trades, right? Focus only on the A plus setups. You need your entry and exit, just to journal that. Market sentiment, that is important as well because when you're trading a stock, for example, like Apple, was that stock ahead of the market showing that divergence? Or was it doing its own thing without the market, right? Taking pictures of the market sentiment and the stock in comparison to each other is going to help you realize what made the trade do what it did. And then lastly, you just need some pros and cons just so you can keep doing some things that you did good and then stop doing the things that you did bad. Next on the list, we have risk management and staying disciplined. You guys always want to be sticking to your trading plan. Limit these to 3 setups a day, 2 to 3 setups. This way, it's going to prevent you guys from overtrading, revenge trading, and going on tilt. You always want to focus on those setups so that you have your focus on the best setups for the day, if there are any. You guys also want to be setting daily loss limits. Setting these daily loss limits is going to help you guys a lot from walking away from the market when you need to. For example, if your daily loss limit is $200, once you hit minus $200 on your account, walk away, come back the next day with a fresh, clear mindset, and be ready to take the next trade. Next, we have using your tools to your advantage. Always use the tools that are given to you to your advantage, right? Reading price action. This is the leading indicator of the market. You guys don't need moving averages. You guys don't need the Bollinger Bands, VWAP, RSI, MACD, all that stuff. The best indicator in the market is price action. Next, we have level 2 and times in sales. Always use level 2 and times in sales. It's going to help you guys identify momentum before getting into a trade. Reading volume as well. You guys don't really want to be trading a stock that has low volume or low liquidity behind it. The same goes with the option premiums contracts. Use alerts to your advantage as well, right? Using these alerts help you know when a trade is getting close to your level, and it may even help you get into a trade or get out of a trade. News, you guys always want to be knowing what's going on in the economic calendar because This is going to help you guys with your sizing and staying consistent. It's going to help you guys to know if you're going to size down during the week, or if you're going to size up during the week, or if you're not supposed to take any trades at all, right? Next, always take advantage of the trading journal. That's going to be the best tool that you can take to your advantage. Focusing on the process. This is when you guys take the time to find what works for you. Add everything that you take to your journal, and take what I put in the slides earlier from the journal slide and see what works best for you. Controlling emotions, right? During this learning process, understand that this is the perfect time for you guys to learn about yourselves and how you react to, during, or after a trade, right? When you guys learn how you react to whatever you do in the markets, it's going to help you learn more about yourself and prevent you from doing any mistakes that you guys may have been doing. Stay patient, guys. This is the biggest one. A lot of people quit before they become profitable, and staying patient is going to go a long way throughout your life. You need to stay patient because you want to learn the absolute most from the markets and yourselves to become the best trader you can possibly be. Having a day trading network. This is one of the biggest ones for me. Having a trading community like Stock Hours is one of the best things I've ever had. This is going to help you guys when you guys are feeling down, when you have a big red day, because they are going to happen when you're starting out. Or even if it's a small red day and you're feeling bad about what you did during the market that day, it's going to help a lot when you reach out to other people that are like-minded like you. Just talking to them like, hey, today I did kind of bad, I broke my rules, and then you guys can talk it out, and then you'll feel a lot better and you won't feel as disappointed in yourself. Always collaborate and learn and help others, and this is going to bring you guys a long way throughout your trading journey. The more you guys network, the better it's going to be for yourself, and it's going to help you a lot in the long run for trading. Thank you guys for watching this video. Hope you guys enjoyed it. Don't forget to like, comment, subscribe, and yeah, see you guys in the next one. Peace.